There are new players in Africa's credit space, and there are personal loan apps. They're fintechs that give out loans to anyone with some form of identification and some form of proven income. However, not all of them are what they seem. Some of them are loan sharks in disguise. Across the continent, stories are on the rise of people being tricked into taking out loans with unreasonable terms. For some of them, the interest rate is as high as 40% on a loan that needs to be repaid in 2 weeks. Debtors are also forced to give the personal loan apps access to their contact list and their social media accounts. Should they fail to pay in the time, broadcast messages are often sent out to their networks declaring the debtors as fraudsters and criminals, and this is done in a bid to shame them into repaying. Irene David Arinze, business journalist and the founder of the LIDA Network, joins me now to take a look at this. Irene, welcome to Business Edge. Thank you for joining me.
Thank you, Tolu. It's good to be here.
So some time ago, if someone wanted a loan, you'd usually go to your friends, family, or even a reputable bank. And now we've seen that technology has changed that. So tell us a bit about how these loan apps work.
Okay, basically, we saw a rise in these loan apps, particularly during the COVID pandemic, when people started to have financial issues. Some people were laid off work, some people lost their jobs completely, and so people started to look for alternative ways to sustain themselves. And we saw a flood of these loan apps from 2019, 2020, because I did my research, I did my investigation, and also discovered that a lot of them registered their accounts, registered their businesses with CAC at the time. And so how they operate is they give you loan, then they use very exorbitant interest rates. They claim that you don't need any form of collateral, but really the collateral that is needed are your personal information, the things that you allow them access on your mobile device, because they have access to your BVN, they have access to your account, they have access to your media platform, they have access to all of your contacts. Terrible. And so while they're not asking you for a landed property, or they're not asking you for evidence of the fact that you have a monthly financial inflow that I can use to repay, your integrity is at stake. And so that's how it works. If you do not pay on time, they have different categories, because I've also spoken, I had to speak with people who work with these loan apps. So they are agents that these loan apps also sort of engage, where they are the ones that are going after people who owe them, people that are not able to pay. So they have from phase 1 to phase 5. Wow. The phase 1 guys are the guys that, maybe they are used to paying, so it's just a quick reminder. Phase 2, they may spend like a week or two. They may spend like a day or say 5 days before they make repayments, say late repayments. And then like the phase 5 guys are the guys, no matter what you do, try and bring heaven down, not going to make repayments for their debts.
Okay, I have to ask, because one of the issues that's been flagged has been the terms and conditions, particularly for these loans. So in your investigation, what are we seeing? Is it, like I mentioned in the introduction, 40% on the loan taken that needs to be repaid 2 weeks after the loan was taken? Take us through some of these terms and conditions.
Okay, so the terms and conditions vary for different banks, for different apps. So you really can, some of them will tell you 50% interest rate, some will say 20%, some will say 40%. So it really depends. There's no staple, right? But one thing we know for sure is a lot of them were leveraging on the Google Play Store. When I did my research on why Google Play Store, you discover that Google Store has a very large foothold on some of the poorest countries in the African region, and I mean some other countries outside Africa as well. And so you find that in Nigeria, they have about 90-something% foothold in the country, meaning that a lot of people make use of Google Play Store. And so the advertisements for all of those loan apps pop up on those on Google Play Store, and then people start to sort of download it. Now, what they don't know is some of these loan apps are not even owned by Nigerians. Well, it's not a problem, like Irukere told me when I spoke with him. That's the head of the Federal Competition and Consumer Protection, agency here in Nigeria. He did mention that, while it's not a problem for outsiders, for foreigners to own businesses in Nigeria. The issue is the policies, the terms and conditions in which they operate. And so they are currently working on ensuring that they put together regulations that these loan apps, can start to follow. Because where there's no rule, there's no law. Where there's no rule, there's no sin. So as it stands now, while they are trying to pin down on some of these loan apps, as a result of the fact that they are encroaching into people's privacy, which is illegal, I must state, that's illegal. The Federal Competition Consumer Protection, along with other federal government agencies, are also now trying to put together regulations, because he said to me that they do not want to get these people out of business, because they are also, they have a place to play. They have a part to play in the economic circle. So you really cannot, because while we are trying to pin down on the fact that they are encroaching in people's privacy, I did speak with one of the agents before. He used to work with them. He said one time he called one of the men, and the man started to cry, saying that they destroyed his marriage, his wife had left him and all. And to be very honest, that while I'm trying to do my investigation, he must point out to me that in the company where he worked before he resigned, there were over 200 young Nigerians that were working in that company.
All right, Irene.
Let me also say this out here. Their base salary is usually 50,000, and then the more you are able to get back these loans from your customers, from people that are owing the company, right? You make more money. So sometimes you may go home with 100,000, 150,000, and that's why you see that some of the guys that call you to start asking for, to pay back, some of them go very brutal, because whether you like it or not, that is what they're using to survive. So it's a very funny. He also mentioned to me that, initially they didn't used to encroach into people's privacy, but when they now try to, it was now sort of like a test run in his company where they would send out these threatening messages. He said, do I know that the first time they tried it, it was so effective. People started to make payments, people that were initially making excuses for why they could not pay. And so they now decided that while he knows that it's morally wrong, it's an efficient way of them collecting money. So it's a two-way, there are two sides of the coin, really.
All right, so Irene, I need to ask, because we know the conversation ongoing in Nigeria. You mentioned, of course, Tunde Irukere, who heads the competition agency here, but it's not just a Nigerian problem. In Kenya as well, digital lenders now have to be licensed, and we saw the Central Bank of Kenya is also publishing a digital creditor providers regulation. So as you said, there are two sides to this. There's the issue of people not repaying, and then these companies also running into issues, and then also the terms and conditions. But do you think it's more of a problem than it is a plus? Because it is also bridging a financial inclusion gap that the continent has. And how widespread is the issue around the continent?
Trust me, when we have the right regulations, when we have the right regulations, these things, the entire, model for loan app, giving would really help, particularly help those people who do not have, say, a constant monthly inflow in terms of, say, salaries and the likes. I did a piece together with my colleague in Zimbabwe, where we started to see ways in which what other models work across the other African countries. So in a country like Zimbabwe, for example, you discover that they don't have all of these loan apps all over the place. Rather, they work more with microfinance banks. Some people may not know, but prior to now, microfinance banks were not even allowed to ask for collateral. But still, as a result of these issues that these loan apps are having, microfinance banks started to have issues where people were not repaying their loans, and they had to sort of save themselves and start to request for certain collaterals. And so I spoke with the executive director of PeaceMass, so the Peace Microfinance Bank, and she was telling me that, because I had to ask her, is there a way these loan apps can start to work together with microfinance banks? And she said, of course, at the end of the day, it's a question of profit sharing. But it's when it comes to, checking the portfolio of people who are requesting for these loans, the microfinance banks can help them identify the guys that are credit worthy and those that are not. And then they are the ones disbursing the cash. And they can also even put, the monies that they are supposed to disburse to these to their clients in the microfinance banks, and then they're also helping them with the disbursement and also sort of like the recovery in terms of ensuring that the process flow, checking how creditworthy each client is. They are the ones that bear the burden. And at the end of the day, there's a profit sharing, metrics that will go between the loan apps and the microfinance banks, which I think is a very important thing that the government can work on. That is what is happening in Zimbabwe in terms of people going to access loans from microfinance. Because I also wanted to go towards the solutions journalism perspective while we're talking about the challenges. How can we start to solve this problem? And that was one easy way that I discovered, and so we put that out there as well.
All right, Irene, we have to end the conversation here, but I think it's one that has to continue as the solution you've mentioned now, but also the dangers. We find people taking loans from one app to pay off another loan in another app. And as you referenced, one gentleman saying that they've ruined his life and his marriage, there are dangers in their access to people's private information as well. So thank you very much for your investigation. We'll be talking to you more about this in the future. Thank you so much.
Being here.
All right. And of course, it is about bridging the financial inclusion gap in many ways. Small, medium, and micro enterprises across the continent do struggle with funding needs. And of course, we know right now things are tight across the continent. So people will be looking for ways to put a little bit more money in their pockets, in their homes, and in their businesses. But it needs to be done in a way that is regulated. You're watching Business Edge. When we come back, we'll give you a few stories we're keeping our eyes on. And this is NC4 with a few stories we're keeping track of at this time. We start in Northern Africa, where the Egyptian non-oil sector has seen a downturn in economic performance in July 2022, with output and new orders falling at slower rates. The headline seasonally adjusted S&P Global Egypt Purchasing Managers Index increased marginally to 46.4 in July from a two-year low of 45.2 in June. As Brent, the international standard for crude oil, fell in price on Wednesday, the Organization of Petroleum Exporting Countries increased Nigeria's crude oil production cap for September 2022 to 1.83 million barrels per day. Ghana is looking to the International Monetary Fund for a possible 3-year financing program worth about $2 billion or maybe $3 billion. The country is facing a nearly $1 billion balance of payments deficit and has turned to the IMF for a support package. And finally, the United Nations is partnering with a company to provide solar panels on a pay-as-you-go system in Uganda. Customers' payments will be tracked digitally, which means they can build up a credit score, making it easier for them to get loans from the formal banking sector. And that's the business we have for you today on Business Edge. Don't forget to follow us on social media. We are at News Central TV. You can also download our mobile app, subscribe to our YouTube channel, and watch us on the platforms we are available. And until next time, which is 11 a.m. West African time, I'll be here putting African business front and center, as well as the economy and financial news. I'm Tolulope Adeleru Balogun. 12 p.m. West African time. News Central Now comes your way.